Welcome to a public forum of the Governmental Accounting Standards Board. Really appreciate all of you being here. Today's July 23rd. And this is a public forum on an exposure draft that we have out on our infrastructure asset project. So a proposed standard. All of you have graciously submitted comment letters, which we really appreciate and have read. But even more so, we really appreciate your willingness to participate with us in this public forum format where we get to dialogue with you as a board about some of your views. And maybe even more importantly, you guys get to dialogue with each other a bit and hear everybody's perspectives. I think we've had two of these already. So this is the third in our series of public forums. And we really appreciate you guys being willing to invest this extra time with us. It's really helpful for the board to not only be able to read your comment letters, but to hear you elaborate on that, dialogue with others, maybe have the ability to ask you a question or two. But you guys are really experts. I know you're busy and have plenty of things to do. We appreciate you taking the time and having the interest in what we believe is a very important project, and appreciate your willingness to share with us. I think how we typically like to start these is introductions. And so I'm going to start with the participants, and I'm going to go in alphabetical order by last name. And then after that, just introduce yourself and maybe kind of your perspectives of where you're kind of coming from in approaching this project. And then we'll introduce the board and team members from the GASB after that, and then turn it over to Joe to get us started. So in my list, I have then Paloma as being the first. If you'll kick us off, please.
Sure. Well, I'm very excited to be here. Thank you for the invitation. My name is Paloma Delgadillo. I'm a council member with the City and County of Broomfield. So a few things that'll kind of couch my answers that you'll hear in some of this discussion, which is that Broomfield is a city and county. So we're kind of a fun little unicorn. And so in addition to a council member, I have the authority of a county commissioner. And then the other thing is that as a council member, I'm not an accountant. I am not a practitioner of this, but I am one of the people who has to make decisions based on our infrastructure. And so my answers will really come at it from that angle. And one thing that I really want to highlight, which I'm very excited about this new draft and really the fact that we're moving in this direction, is that for those of you who remember calculus back in the day, there's like where we are, there's the change, and then there's the rate of change. And I think that a lot of the suggestions in this new draft get at the rate of change, because if we're starting to not be able to keep up with what we have, and that's clearly identified in our documentation, then it's on me and my fellow council members to make decisions on what we do to ensure we can keep up with our infrastructure. So that's a little bit about me. Very excited to be here, and I'll hand it back off.
Thanks, Paloma. And we try to bring and get both preparers and auditors who typically are CPAs, but also users. You won't be the only user on the panel. So certainly the views of people that use the financial report, even though they're not accountants, are especially important to us. So we appreciate you investing the time and providing us your thoughts. Next is Christopher.
Yeah, hi, good morning. My name is Chris Goldman. I'm a director with CLA. I work out of our National Assurance Office. And my role at the firm is really supporting our state and local government audit practice. So, a lot of that entails, quality reviews, pre-issuance reviews, assist with technical inquiries and consultations, both on, auditing standards and GAAP, and also serve, in other roles with internal inspection, and the list goes on. But I've been serving state and local governments my entire career, which has spanned about 20 years now. And I've also worked in municipal finance for a couple of years. So I have some perspective working in government as well. And thank you for hosting us today.
Thanks, Christopher. I don't see you on camera, but it looks like you're there. Anise?
Good afternoon, everyone. My name is Anise Golshan. I'm a CPA in the state of Texas, and I work for Texas Department of Transportation, or TxDOT. I'm really thankful for having the opportunity to participate in today's forum, and I'm here to learn more about this exposure draft. We have been involved since beginning. We were one of the 12 governments that participated in the preliminary review, and we are really interested about the progress on this exposure draft because it's going to heavily impact us. And again, I'm really thankful to be here. Thank you.
Thank you for being here. We appreciate you participating in that field test from the preliminary views. Next, I have Washia. Hopefully, I said that pretty close.
Yeah, thanks, Joe. Hi, everyone. My name is Huaxia Li. You can also call me Hendrik. I'm assistant professor at University of Michigan, Dearborn. And specifically, I teach accounting information systems and data analytics for accounting and auditing. So just to let you know, I'm not a standard setter. I'm not an auditor. I'm not a government. I'm not a firm. So I'm from the academic background. And as I mentioned, I study some accounting information system stuff. And specifically nowadays, the utilization of AI IT technologies in the accounting and auditing side. So some of my point of view will come from this direction, and hopefully it will reflect some of the users' reflection if they actually use some IT-based stuff to help them understand the standards or later on read the government's report. And specifically in our project, we used AI and some technologies and some human review to look at how is the infrastructure currently disclosed by those states and local governments. But we didn't look at everything. We just look at a few specific stuffs at this stage. For example, whether a government uses the modified approach, whether it reports condition, whether it reviews useful lives, or whether it depreciates major components separately. And we examined the 53 big governments, including 49 states and 4 large cities, and we put together what they actually do and what they don't. And we compared that with the exposure draft. So what I bring is the findings from that work, and I'm glad to leave some our technical writings if you are interested in that. And thank you for having me.
Thanks, Hendrik. Gabrielle.
Hi, my name is Gabrielle Poole. I'm very excited to be here. I work on the State Farm Municipal Bond team, where I work on a team of 8, and we manage about 50 billion of municipal bond assets. Public power and water sewer is my area of focus specifically, and so as a user of the financial statements, this is very, very important to us. We're excited to see progress because we believe the changes here will be very, very positive as it allows us to better assess local governments and their systems, and it provides clarity and transparency. So we're very excited, very thankful to be here, and thank you for taking the time to have this.
Thank you, Gabrielle. And Don Weissman from the City and County of Denver Auditor's Office is the one that maybe we hope will join us at some point. And we actually had a couple of others that dropped out at the last minute, but we appreciate you all being here, and we look forward to hearing your perspectives. From there, let's introduce the board and then our project team. My name's Joel Black. I'm the chair of the board, and then our vice chair is Jack.
Good afternoon. As Joel mentioned, I'm the vice chair. My name is Jackie Reck. I'm an academic. I'm currently a professor at the University of South Florida in the Lynn Pippinger School of Accountancy, and my area of expertise is government not-for-profit accounting, and I do research in that area. So I was really excited about the research project that you are doing, Hendrik, and very interested in reading that. But I'm also was very interested in reading all the papers. Some really interesting thoughts and some really interesting comments that came in on your papers. And it's so important that we get that information, and really appreciate your being here today to share it with us verbally and your additional thoughts beyond what you've written in your papers. So thank you so much for taking the time to be with us. It's great having you here.
Thanks, Jackie. Chris.
Good morning and afternoon. I'm Chris Knight, and I'm a GASB member.
Chris, Diane.
Good morning. I'm the former Colorado State Auditor, a GASB member, and I have found these public forums so interesting in getting your thoughts, and we appreciate you being here.
Thanks, Diane. Robert.
I'm Robert Scott, GASB member and Director of Finance and Administration for the City of Brookfield, Wisconsin. As my fellow board members have indicated, appreciate you being here, appreciate you already providing the commentary, and look forward to hearing you expand upon the written words in our interaction this afternoon or morning, depending on where you are.
Thanks, Robert. Carolyn.
Good morning or good afternoon. I am Carolyn Smith. I used to be the Chief Audit Executive for the largest school district in Columbus, Ohio. And as my colleagues have said, really appreciate getting the feedback that you all have to provide to us, the different perspectives that you bring, and just you all finding the time to join us in this dialogue, because it is very, very important. So just thank you for being here.
Thanks, Carolyn. Lisa.
Yes, hi. I'm Lisa Washburn. I'm a GASB member. I'm also a managing director at Municipal Market Analytics. So I am a user of financial statements. So I'm really looking forward to hearing some other user perspectives, as well as everybody else's perspective here today. And yeah, I really appreciate your comments and your letters. I think all of them were very, very thoughtful and very helpful.
Thanks, Lisa. So that's the 7 board members. So our team, our technical director, Alan.
Good afternoon, good morning. Alan Skelton, Technical Director at the GASB, and like everyone else has said, we're really happy to have you here today and look forward to the dialogue.
Or I'd turn it over or give it to Joe to introduce himself, because he's going to be the moderator. I'm just going to turn the whole meeting to him. Jomara.
Hello, everyone. My name is Jomara Bencanova, and I'm a GASB staff.
Thank you. And now, Joe, I will turn it over to you.
All right. Thank you, Joel. Good morning and good afternoon, everybody. I'm Joe Wicklund, GASB project staff. And we really appreciate you. I would echo the comments that everyone has already made. Thank you so much for your feedback ahead of this and also your participation in the public forum today. So a couple housekeeping items before we begin. I want to note that this forum is being webcast, recorded, and transcribed, primarily for analytical purposes. The recording and transcript will be part of the GASB's public file because this is a public meeting of the board. Our objective for this session is to hear your responses to questions about the proposals in the exposure draft. There are a couple of ground rules intended to keep the discussion moving and to help us get through all of the questions. Each of you will have an opportunity to answer each question. For each question, we'll start at a random spot in the alphabetical list of participants, and I'll proceed alphabetically in order. For clarity, I will call on each of you by name when the person before you has finished making their feedback. We do hope that you will answer every question, but if you wish to pass on a question or to just echo what someone has said previously, please feel free to do so. If you do choose to echo prior comments, I would ask that you please be specific about whose comments you're agreeing with, because you don't have to repeat everything they said, but you can just note who you agree with. And I mention this just because it can be a little difficult to analyze. I agree with everything that's just been said when some of the previous speakers may have not agreed with each other. And then after everyone has had a chance to answer a question, we'll open up the discussion for that topic. At that time, you can respond to the question that if you initially passed on it, or you can follow up on things other participants have said. You would just use the raise the hand feature and I'll call on you. And then also, we'll turn it over also to the board members to ask any follow-up questions should they have any. And I would ask also, unless you're speaking, please put yourself on mute and remember to unmute yourself before speaking. And we've got about 4 hours is the full time limit for this. We'll see, depending on time it goes with everyone we have here today. But I'll note that we'll take a short break about halfway through. But if you do need refreshments or to take a short break at a different time, please feel free to do so. We just ask that you wait until after you've answered the current question before doing so. And so with that, before we get started with the discussion questions, I would just put it out there. Are there any questions before we begin? All right, seeing none, let's get into the first topic, which is the definition of infrastructure assets. So paragraphs 4 and 5 of the exposure draft describe the proposed definition of infrastructure assets, which would amend the current definition provided in Statement 34. The proposed definition identifies infrastructure assets as capital assets that are part of a network, they're stationary in nature, and they can be maintained or preserved for a significant number of years. The proposed guidance also includes additional clarifications of this definition by further defining networks and components of infrastructure assets. And so that would bring us to the first question, question 1, which is, what feedback do you have about the proposed definition of infrastructure assets? And Paloma, if you wouldn't mind kicking us off for that discussion.
Sure, I'll go ahead and kick us off. So I do really like the definition, and I think it captures something that's very important, which is this kind of from this normie perspective, and pardon me for my millennial jargon. I am a millennial. It's going to come out once in a while. But for those of us who are kind of coming in from council, we're coming in from different backgrounds. We understand asset to mean something very different. And so I like this definition that it kind of separates this. The fact that this definition, it identifies that this is something that is useful for residents, useful for guests who come into Broomfield or your municipality. I think that's great, while also making it separate that this is not something we could sell. If the city and county of Broomfield were under financial distress, we can't liquidate this. This is for our use only. This is not something when a normal person thinks of an asset, something that they could get rid of and they could end up in a better spot financially. So I like this. I think it walks the line very nicely of, yes, this is a thing that has value for people, but this is not something that makes the city rich. This is not liquid cash. This is not something that we could really utilize. And I think that definition makes it very clear for the normal people like us who are really trying to understand the state of our city finances.
Thank you, Paloma. Next would be Christopher.
Yeah, thanks, Joe. Yeah, we support the changes to the definition of an infrastructure asset. In our comment letter, and I'm sure you got this more than once, but we recommended providing more illustrations as far as what a network could be and what would be those components. I know you can't provide illustrations for every single example of a network and their components, but the roadway example was great and it's helpful, but perhaps we could add another one for maybe water infrastructure, water system or sewer system. I think would be very helpful for preparers. Thank you.
Yeah. Thank you, Christopher. Honest, you're next.
Okay. Yes. In general, we are agree with the board definition, and we think that is really consistent with the GASB 34 definition. It has slight changes. We think it's more comprehensive, and we appreciate the fact that all elements of this definition are in the same place and specifically at the beginning without having things in the footnote compared to what we had in GASB 34. Some part of the definition was in the footnote, but here we have everything right at the beginning. We really like that. One thing that I notice that needs maybe a little clarification is related to the difference that I see between paragraph 5 and paragraph B63. In paragraph 5, I see that components are defined, or example that are provided for components are roadbed, overlay, or curbs and gutters as components of a road. However, in the alternative view section, paragraph B63 appears that the components is being defined as a portion of the road. For example, I think we are in this example, we are saying 8 miles compared to 20 miles of road. So it's a segment of the road. I would like a little clarification on this, if possible, either today or in the final draft. Thank you.
All right. Thank you, Anas. Next would be Hendrik.
Yeah, thanks, Joseph. So in general, to me, I feel like, the definition looks clear to me. And I feel like it fits how governments already think about the infrastructure, meaning the roads, the water, the bridge, and so on. And I think building it around the networks is smart because that's how they already report, right? But the only thing I watch is those edge cases, like a building that sits next to a network. That's where two governments might not agree. But overall, I'm fine with the definition.
Thank you, Hendrik. And then last for this question would be Gabrielle.
Yes, so we do agree with this improved requirement. We believe that the outcome will allow for a clearly defined network level breakdown. And I think as a user, as a user of the financial statements, this is very beneficial to us.
Thank you all, 5 of you. So now that we've received your feedback, your respective feedback on question 1, would like to turn it back over. Would anyone like to follow up on what they've heard or add to their prior comments? Anything you've heard from other respondents? And if so, just use the raise your hand feature in Zoom and I'll call on you. Well, barring none, also, before we move on to the next question, want to also turn it over to the board. Do any of the board members wish to follow up on anything they heard with regards to the definition of infrastructure assets? All right. Well, let's move on to the second topic, which is related to components. Paragraph 6 of the exposure draft, it proposes to separately recognize and appreciate a component of an infrastructure asset when the cost of the component is significant in relation to the total cost of the infrastructure asset, and when its estimated useful life is substantially different from that of the infrastructure asset. The board believes that the resulting amounts recognized as infrastructure assets and annual depreciation expense will be more representative of the actual use of the infrastructure assets. In response to stakeholder feedback to the preliminary views regarding the effort that may be necessary for some governments to apply this guidance, the board proposed in the exposure draft that such guidance would only begin to apply to infrastructure assets, starting with those placed into service in the year of implementation. However, as noted in the base for conclusions, a board member has expressed an alternative view related to difficulties that the application of this proposal may still present for governments. So that gets us to our second discussion question, which is, what feedback do you have about the proposals to separately recognize and appreciate components of infrastructure assets? And this time around, Christopher, if you wouldn't mind kicking us off.
Sure, happy to. First off, I don't think you can argue with the merits of this practice of componentization and breaking out assets that are significant, that have different useful lives, right? You're going to refine your useful life determinations and results in more accurate depreciation. There's no doubt that is true. And I do think that in practice, there's probably a fair amount of governments that are currently doing it, and not just with infrastructure assets, but just all assets. So, it is, I agree, it is best practice. Although I just, the problem I have is just that this practice would be, now the mandated approach, the required approach, and it is a quite costly approach. It's going to be incredibly costly for especially smaller governments to comply with this standard. And so that's the real issue I have with it. But I will say that I appreciate the board's receptiveness to the costs of this. I think it's by far the most costly component of this standard. And you guys decided that a prospective implementation is the route that you were going to take, at least in the exposure draft, which it really alleviates a lot of the burden associated with this. I do think that the alternative view, we do agree with the alternative view that, into the future, as we start componentizing our capital assets, there's going to be some issues with taking old assets off the books associated with those components. And so I think that is very good perspective. I would request that the board really do a very detailed, and I know you are, a very detailed cost benefit analysis specifically on this component of this standard. Thank you.
All right, thank you, Christopher. Honest, you'd be next.
Thank you. So yes, we agree with the board view that yes, taking our infrastructure and breaking them to the components, it definitely will create a better results. But we think that the cost is really high, especially for a government in our size. Just giving some number here, as of end of August of last year, we had 9,000 projects for constructions, and that was within 25 districts. So we consider it very costly to implement this, although we agree with the board view. In one of the paragraphs, the board member specifically mentioned that this is going to be really difficult when it comes to roads. But we think our bridges are in the same situation, and I think we have about 55,000 bridges statewide under TxDOT management, and that's the reason that we think it's the cost is a little high for us. Thank you.
Thank you, Honest. Hendrik, you'd be next.
Yeah, thank you, Joseph. In general, I support this goal from the academic perspective, and I feel like depreciation that matches specifically how things actually work out is the right thing to do. But I also anchor on this point of view. This is costly. As I mentioned, we reviewed 53 governments. Most of them from the 2025 efforts and some of them from the 2024 efforts, including the 49 states and 4 large cities, municipalities. Those are all the large cities, right? They are maybe the strongest local entities in the government accounting. So none of those actually disclose those kind of information. Meaning I cannot say like 100%. We do 2 rounds of review. One is using AI. The second one is 2 independent research assistant manually review the result, and we do not find any government review that specific information. Remember, that's from the 49 states and the 4 large governments. So smaller governments apparently might be further behind. So, but from my point of view, that's not a reason to drop it. it's a reason to go slow, right? Maybe only for the new assets and with some clear rules and a few examples to guide them. And on roads, give some small governments some relief because I agree it is actually very hard for them. So maybe more guidance and start slowly and start with the new asset. That's my point of view.
Thank you, Hendrik. Next week, Gabrielle.
Yes, as a user of financial statements, in my view, it will improve my ability to assess system-specific asset condition, capitalize additions and improvements, as well as potential future capital needs and any debt issuance. I think this improves transparency and it enables us to have more effective credit as well as investment analysis for these municipalities. So we're in support of it.
Thank you, Gabrielle. And then last up would be Paloma.
All right. So a lot of great things were said, and I do agree with the statement, the sentiment that, yeah, this is absolutely the correct thing to do. It is also difficult and probably very challenging for governments, especially smaller ones, to do. And so that perspective implementation is great. What I'll add is I'll add the Broomfield perspective, and this came to mind as I was listening to all of you, which is that our city and county, we roughly doubled in population over the last 15, 20 years. And so one of the reasons this is really important for us is that we are looking at potentially this big bill coming, this big liability coming our way. We're flush now. We have a really strong net financial position and that sort of thing. But we are going from this growing community into this kind of aging, this more mature community, and we're transitioning to that point. So I think the example of the road, the example of assets where the top of the road, that needs to be replaced every 15 years, but the infrastructure underneath, that can be every 30 years. That's very helpful for us to know, to understand how big is that liability actually going to be? Is there a distinction we need to make? And thankfully we have, I think as a city, we would do a pretty decent job at the retrospective, but I still agree with the going forward. That's the reporting. So that's the little Broomfield flavor of why this would be particularly useful information for us. Thanks.
Thank you, Paloma. Next, I'm going to turn it over to the participants. Would any of you like to follow up on what you've heard in response to componentization or add on to your previous comment? If so, use the raise your hand function in Zoom. And barring none, then I would also turn it over to the board. Do any of the board members wish to follow up on what they've heard related to componentization? And I see, Joel, you had your hand up first, so I'll start with you.
Thanks. Joe, you didn't necessarily, but I'm going to address this to maybe Christopher and Anise. You talked about costs in your comments here. When I read your comment letter, both of you put some version of this componentization requirement would require us or our clients to redesign or change processes and systems. I understand the process part, right? At least in my mind, a process is I now have to do something extra or different as I capitalize these new items coming in because I might have to break them apart. So I get that the process would change. I get that that's costly. It's the system part of it that I guess I'm interested in hearing about. And when I think system, I'm thinking like IT system. And so would you really, I guess I'm trying to understand how you would have to change your IT system in order to track components as separate assets instead of one collective asset, and what kind of change that might be if you don't mind.
Yeah, I was hoping the gentleman from TxDOT might be able to, he's probably a little bit in better position to respond to this question, especially having worked with you guys on one of the trial runs. But um, I think I generally agree with you, Joel, that it's probably more of a process. It's going to be more labor intensive, componentizing those assets, evaluating assets, whether they need to be componentized first. And then obviously, instead of having one asset, you might have, 30 assets, for a wastewater treatment plant. Uh, I don't think you should have a wastewater treatment plant, uh, as one assets on your books for 300 million. There's obviously some significant components we need to break out. And they have different useful lives. They're gonna, it's gonna break at different times. We need to refine it. And also it's just good practice. It helps too when 10, 15 years down the line, we got to take those assets off the books. That's just good practice. Um, I think that for really small governments, they have some pretty rudimentary tracking systems. It could be as hopefully not on paper, but it could be as rudimentary as Excel, and that might not cut it once we inject a little bit more complexity into tracking infrastructure assets. But no, I agree with your point, Joel.
So just Robert, I'll come back to you, but yeah, Ennis, if you want to, yeah.
Sure. Thank you. So in response, I think we have some details already available to us, but it's not in the level of the details that was illustrated in exhibition at the end of the exposure draft. For example, in that illustration, we had road one, and under road one, we had the components of road one. Then we had road two, components of road two. That's the reason that I think it's going to create some challenges for us, although we still have some details available, but it's not at that level. So we have to make some changes in order to come up with exactly what GASB was directing us to have in the exhibition.
So, Anis, is the idea that you anticipate having to associate a component with its larger asset, so you almost have to be able to connect them in the system, and that's the part of the system that you're worried about. Whereas if you didn't necessarily have to connect them, but they were just separate assets, then the system might be okay. Certainly, still the process would have to be undertaken. That's what I heard you say. Just
Yes, sir, that is correct. And in fact, when I was looking at the illustration, I was thinking, really, we want to break our infrastructure by components. So kind of my thought was, do we need to have information on a specific roads? Can we just identify what are our components and then create accounts to track those components without associating those components to a specific roadways?
I understand, and I appreciate both of your responses. Thank you.
Yes, sir. Thank you.
Thank you both. Next up will be Robert.
Thanks, Joe, and thanks everyone for your answers. The one question I had was not specific to your answers, but maybe what you didn't talk about either in your comment letters or in your remarks, because we received in many of the comment letters we received, there were concerns about definition or looking for more granularity about the terms significant and substantially different. And I just wanted to pose the question to the participants whether that you had any specific concerns in that regard, in terms of determining whether a component cost is significant or the useful life is substantially different. And if not, that's fine.
I think, Christopher, you had your hand up first.
Yeah, I mean, I think that preparers and practitioners would always like a little bit more things a little bit more well defined. But at the end of the day, I mean, this is an estimate, and there's a lot of professional judgment baked into this. And so I think it is likely enough. I think it's enough to make the determination what the board has provided here.
Thank you, Christopher. And before I go on to Lisa, Honest, did you have your hand up?
Yes, sir. I think one thing that I want to add here, one of the challenges that we have right now, I think we don't know what are our components exactly that have a significant cost compared to the total. And we are not sure about their useful life. So one thing that I was thinking we have to do is to get connected with our engineers, study those components maybe over a few years to determine those components that have a significant cost and learn about their useful life. Thank you.
You honest. All right, and Lisa.
Hey, everyone. Thank you so much for all of your comments. So I think that it was almost universal that I heard that people think that componentization yields a better result in terms of useful life and more accurate depreciation, but that it's going to be very costly to do. And I'm wondering if and I also heard Hendrik, you said that, because of that, you should go maybe slow, and, only for the new assets, right? So, that could be a way to kind of manage that. But I was wondering if anybody had any other ideas. Is it Since this is really, it sounds like it's the approach to go, are there other ways to achieve it, or is it really, are we limited to going slow and for only new assets in order to be able to move towards componentization, or is there a better way to do that? And maybe more specifically to Paloma, is there a way that your government made the choice to actually focus in on infrastructure more specifically? How long did it take you to get to the place where you thought, or where you were able to actually kind of even shift? I think in your letter you said you shifted from one split between new and old, new and maintenance, to being more focused on maintenance. How did you get there?
All right. Well, I'll pop in. I'll answer what I can, but I think this is a worthy follow-up, and I will try to give a sufficient answer. And if not, this is a great one to kick to our staff, who's really I want to give them a huge shout out right now. They were really the ones who have been so forward-looking with our stuff. I think it's very easy for a nice suburb in the situation we're in to be very complacent and feel like we're really doing well financially, everything's good, without looking at the potential fiscal challenges that could happen in the future in that transition. So in terms of that, I'll give you the example that happened with our water infrastructure. So the story is that so for about a period of 15 years, councils made the decision, and this is likely because the recommendation was not there, to increase rates. Past councils only increased water rates by anywhere between 0% a year to 2%, 4% a year. And we ended up in a tough situation where, because of that compounded deferred maintenance, in 2024, our council had to make the very difficult decision to increase rates by 50% and actually start breaking things out in terms of, there's an independent stormwater fund. We never separated that out from the general water fund. So make those tough decisions. Since then, we've been on a plan to the subsequent year. It's about a 15% rate increase, 9%, and now we're at the phase where we're looking at 7% forward looking. So with that specific example, that was a period of discovery, and I don't want to misquote the number of years, but it was years that staff went through to look through old documents and find information, because there's a paper trail, but it's not digital, right? It was literally a paper trail that staff had to go through and find, for instance, we discovered we have like double the number of ponds that we thought we had. That was a rough situation to discover, but in that process of discovery, that is how we ended up coming to the conclusion that the past decisions by council, admittedly as informed by staff, there's a push and pull there, was not the correct decision. We made some not so great choices, did not increase rates enough. So I would say that process, it was a complex process because it's not like the data was readily available for us for the state of our assets. And it took several years then to actually really dig into this information and parse this information. So it was quite challenging. I'm very happy we're in this better place now. And certainly shout out to our staff for even thinking to go through that exercise, but it was a complex process of a few years.
Thank you.
Thank you.
Thank you, Paloma. Hendrik, so you had your hand up next.
Yeah, I want to appreciate Lisa for bringing this up. So in addition to the timing and also the new asset that I mentioned, maybe I think maybe we can set up a size threshold for the government, meaning a smaller city, like for example, with only one road network or two road network, isn't held the same granularity with a larger city's DOT department with like 55,000 bridges, right? So that's a completely different story. So match the effort to the size. So like given different policy requirements for different threshold of the cities. And secondly, maybe phrase it in by the asset class. I start with the highest value networks where componentization actually changes the picture. And then let those preparers build up the muscle first and then widen it to mid-level or smaller level valued assets. So that could be another direction to consider.
Thank
Thanks.
you. Thank you so much, Hendrik.
Yeah, Hendrik. Carolyn, you had your hand up.
Yes, thank you. I kind of thought Lisa covered it, but I just wanted to give the other participants a chance to weigh in on, we heard a lot that it's a worthwhile endeavor, but there's a concern about the cost, and particularly for smaller governments. Do you have any ideas you would like to share with the board as ways to lessen that burden? And if you don't, that's fine. I just wanted to give everyone a chance to kind of weigh in on that question.
Real quick, it looks like Christopher has his hand up for Carolyn's question, and then Jackie, I'll go to you next. Christopher.
Yeah, I mean, I think that you've done what you can do with prospective implementation of this. I think that's the biggest thing. So outside of that, certainly you could do a phased in approach or exempt certain reporters from these requirements. I don't know if that's something the board wants to do, but it's like I said, you can't debate. This is best practice, but it's just the improved information that we're going to get from this, is it worth the costs to componentize these assets in government systems?
Thank you.
Thank you, Christopher. And Jackie.
I can appreciate the comments you've made and the fact that it would be so much easier if it was prospective rather than retrospective. For those of you that have got these systems or work with people who have these systems, how do you envision a perspective working where you are able to actually identify significant components prospectively as they're added, how would you know whether that component is significant? What would be your decision point? How would you go about doing that prospectively without looking at retrospectively? If you have any thoughts on that, or if you haven't thought about it yet because it's not there, so you haven't worried about it, that's fine too.
Gene, on that, and I would say anyone who thinks on that as well and has feedback later, please reach out to the team. We'll be happy to, hear that and back to the board later. All right, everyone. Barring any other topics or any other questions related to components, we're going to move on to the third topic, which is periodic reviews. Paragraph 7 of the exposure draft proposes to emphasize existing implementation guidance for performing periodic reviews of the estimated useful lives and salvage values used in the measurement of depreciation expense for all capital assets, but this would be in the exposure draft specifically for infrastructure assets being depreciated. The board's intent is in part due to the significant number of years over which infrastructure assets are used to provide service, and concerns expressed by users during the pre-agenda research indicating that a significant number of governments have infrastructure assets that are currently reported as fully depreciated, even though those assets are still being used by governments to provide services. And would also note that the exposure draft proposes transition guidance that would require such a review to be performed at implementation, and that changes resulting from that review would be reported retroactively by restating beginning net position or fund net position as applicable for that effect for any change in the prior periods. So really we have two questions here. I'm going to pose them at the same time, but interested in specific feedback to both, which is first, the question 3, what feedback do you have about the proposal to perform periodic reviews that estimate useful lives and salvage values of infrastructure assets? But then also separately, question 4, which is what feedback do you have about the proposal to perform that review as a part of implementation and to restate beginning net position or fund net position for the cumulative effect of that change on prior periods? So both the reviews and then the implementation guidance. And Anas, if you wouldn't mind kicking us off for this discussion.
Yes, sir. So we think we totally agree with the pre-agenda research finding. Yes, we believe that there are many governments that are reporting assets that are fully depreciated, but they are still being used. So we agree on that. As I think Christopher mentioned, we appreciate if the board could provide some type of illustration on periodic review. We loved how the board prepared the illustration in GASB 103. So that was really helpful. So we will be thankful if we get some guidance on how to conduct the periodic review. Thank you.
Thank you, Anas. Next would be Hendrik.
Thank you, Joseph. So to me, I think this might be one of the most useful changes in the whole draft. To me, I think it is cheap compared to the last question. And as we know, a useful life is just the gas for how long something will last in the future. And in our review of the 53 governments, only one state tells readers it checks and updates those guesses. That's 1 out of 53. I don't think that other governments never check those, but readers just never see those, right? So from my point of view, that matters, because if you said it once and never look again, you end up with roads that are fully worn out on paper, but maybe still full of traffic on the road. So just a simple review, like showing to the readers, fixes some gaps it's like for almost nothing for the government. So if I have to pick one thing that really need to be changed to be updated, I think this should be the one that we should really emphasize in the exposure draft. That's
Thank you, Hendrik. Gabrielle, you're next.
Yeah, so from our perspective, we think this is actually quite beneficial to the leadership of local governments. It will allow them to have a more accurate and complete view of the condition of their infrastructure assets. And in turn, that would allow for more accurate capital improvement plans, as well as the estimates of future borrowing needs. So from our perspective, it would be a positive. I don't have a comment on the implementation.
Thank you, Gabrielle. Paloma, you be next.
Yes, I agree with a lot of things that were said specifically. Yeah, I definitely support the intent behind this proposal. The question about the word periodic, I agree with some of the ambiguity there being a little tricky to navigate. I was spitballing some potential ideas of when, like what could trigger, because I was thinking, does an arbitrary timeline make sense, or does it make sense to tie it more to an event? And so some of the ideas I was thinking of, when a major rehabilitation project is undertaken, that is part of that periodic, would be that trigger. Maybe when an asset undergoes a significant change in its condition. So if we were suddenly to discover that that occurred, that could be like, okay, now we need to start monitoring very quickly, very closely. When the new component is placed into service, so if we were to do that componentization thing, that could be potentially tie into this trigger. And then maybe when an asset approaches some threshold, maybe 90% of its estimated useful life, not married to that number, but that could potentially provide a little bit more guidance to that periodic number. And then kind of the second item, the implementation and this potential for restating information on the useful life of things. It will be, that change, I think, would be very jarring and a little distressing for us, but it is important. I think if the useful life was not correctly stated, or new information has come to light and it's just not the case anymore, that is an error that needs to be corrected. So I'll grit my teeth as the council member dealing with that, but I think it's useful to have that information. That's still very necessary to have. The concern there is, of course, with feasibility with anything retroactive. I already gave you that Broomfield example of information exists, but it might be hidden in a filing cabinet somewhere that no one has touched. They've retired. We don't even know where things are. So retroactive is always a little bit challenging. But I certainly agree with the push for this. I think that restatement can be jarring, but it is still important for us. And I think these changes are, I agree with Gabrielle, a great decision-making tool for us. Thank you.
Paloma. And then last to be Christopher.
Yeah, we support these changes. I think I honestly agree with everything that's been said thus far. I think a little bit more maybe potential interpretive guidance around periodic, what periodic means. There's going to be some reporters that faithfully make that interpretation and do it every few years, or when information comes to them that maybe suggests that we need to extend or reduce useful lives going forward, when we capitalize or we change estimates for assets currently on the book. So I think some interpretive guidance on that would be helpful. I think that restating is the way to go. Obviously, this is already GAAP. It's just being elevated to Category A. One of the questions that I have is, when we do this restatement, is this going to be considered a correction of an error because it was already GAAP? Obviously, it's slight changes, but is it going to be a change in accounting principle? That's one of the questions I have, which obviously will have that determination will impact our footnotes, and obviously GASB 100 dictates, other changes throughout the report, such as RSI if it's correction of an error. So, love to get a little bit more information on that.
All right, thank you, Christopher. What I will do now is turn it over to the participants first. Anyone wants to follow up on anything they heard regarding the discussion just now, and then also if you'd like to follow up on any of your prior comments. But I also see that Alan has his hand up, so I'll kick off with you, Alan.
No, I wasn't going to say anything. I'm asking a question. I just want to follow up on Christopher just a second. I think it's important just for everybody on the call to hear it. The reason why, one could argue, Christopher, if you have a bunch of assets that are past their useful lives and still in service, you haven't been periodically updating useful lives, one could argue you have an error, right? And so therefore one could argue that you should fix the error. I think what the board's trying to do is realize that we know that situation exists, and we think getting the useful lives are right, and we think getting the right periodic useful lives are right to have on there. And yes, we had that level B gap already out there, but if people missed it and didn't realize it, by putting it elevate to level A and doing the transition provisions like we're doing them, we're allowing folks to treat that as a change in accounting principle, and therefore they don't have to treat it as an error. So you almost get a one-time pass to say, okay, if you didn't do it now, do it with this. We're going to reset those useful lives, and therefore we're going to reset that accumulated depreciation, and we're going to do it as part of this project, and therefore it's not an error. Even though in the current world we live in today, you might have one, this kind of allows governments to get a one-time reset. And so to answer your question, they wouldn't call it an error. They would call it a change in accounting principle. And I do think that's relevant and important. So no one would have to say, oh my gosh, we made a mistake. No one's gonna have to say that. They're just gonna have to say, and Paloma will get the same answer. Here's what your useful lives really are, and here's how many of your assets have now changed because of that, and here's how depreciation expenses changed because of that. But that is a truer picture of what the real situation really is. I hope that answers your question, Christopher.
Sure.
Yeah, it does, Alan. Thank you. I just want a clarification. That's the feeling that I got when I read this standard, that was the board's intention, but just wanted to get that clarification. So thank you.
It's Christopher. Before turning it over to the board, just want to make sure one last time, any of the other participants would like to follow up on anything they've heard or add to their prior comments. And seeing no hands up, before we move on, then I'll turn over to the board. Do any of the board members wish to follow up on what they've heard related to periodic reviews? And Diane, I see you have your hand up.
Thank you, Joe. Chris, I'm going to pick on you again. So you talked about the periodic, and we got a lot of comments in the comment letters about different ways of approaching that periodic. And I was wondering if you have thoughts, like if we build that around like at least periodic, but at least every 5 years, and I'm just throwing that out randomly. But what are your thoughts as far as putting any kind of structure around that periodic?
I would like to see a little bit more structure. I don't think it has to be overly structured, but just some, some guidelines and to keep people, on the right track. It's just, I think that what we're going to effectively do is we're going to clean up these balances. These balances are going to be more accurate. But this is kind of a one-time thing, and then we expect periodically that they continue to evaluate useful lives. But I don't know if just saying periodic has the teeth we need it to have governments continue to do that reassessment. Because I think some might interpret that as every 10, 15 years, and that might be, for long-lived assets, that I guess might be okay. But, I do think it's something, I hesitate to put a timeline on it, 5 years, but I think it's more when information comes to you that suggests that we need to change it. Whether that's a study or the budgeting process or engineering estimates. An asset was retired, before the end of the useful life, and so all of those inputs should go in obviously to our estimates. So I don't know if it needs to be dictated every 5 years, but some guardrails would be helpful.
Thank you, Chris. Alan.
So this feels like the Chris question session. Chris, the one thing I just would say, maybe you have thoughts on it. I'd worry a little bit, and I worry a little bit is if we come up with any kind of like time frame number, we're going to hear folks say, "Well, that's just you said 5 years. That's just arbitrary. There's no relation to why it's 5 years." So I start wondering whether or not and you kind of hinted at this, whether or not it's less about how often in terms of years, but it's when things happen that make you think that you should be rethinking about it, right? There's things that happen in the environment that make you think you should reassess it. And it's more about characteristics or events that cause you to rethink it than it is just about an arbitrary number of years. Because if I think we just had 5, that's what we'd hear. We say, well, that's just arbitrary. It doesn't really mean anything. And so I think the board's gonna have to weigh that and decide how to address, without defining periodically, with perfectly precision, how do you actually provide a little bit of guidance? I don't know if you kind of said that a little bit, so maybe that's not a question. Maybe it's just an agreement on what you're saying, but if you had thoughts, I'd love to hear that.
Yeah, no, I agree. I think that if you put a number out there, it would be arbitrary. Obviously, you could spend more time and effort and study the issue more and figure out what the perfect number is or what a better a number could be. But obviously, it's so different and dependent on we've got very small governments and we have very large governments, and with different infrastructure assets, different levels of complexity, different environments in which they operate. So, I don't think a one size fits all approach is correct. But I do, like I said, some interpretive guidance just of, hey, what does this periodic assessment look like? What would be some factors that you would look at? And I think that would help practitioners too, and making sure that preparers are going through this periodic review. So yeah.
Christopher. Lisa.
Yes, just kind of continuing this conversation, because I understand, or it seems to me that we're talking about triggers maybe being a better way to actually, define what periodic means. And Paloma, I think you talked about some triggers. I wrote down major rehabilitation, a sign of a change in condition, placed into service, some threshold level. I was just wanted to open it up to other people if there were other types of triggers that we should maybe consider.
Yes.
So I really value and appreciate this discussion. Just a word of caution. Not everything, right, within this capital asset and infrastructure asset world is governed by triggers, right? Sometimes you buy a widget or a component of this major infrastructure asset and you expect it to live for 20 years. But because of your crew and your staff, it lives for 40 or 50, right? And there's no trigger necessarily. It's just the way it is, right? And we figure that information out over time with these periodic assessments. And so not to defend in any way, but just as we kind of continue on with the discussion, I just encourage everybody to think too about ways that the GASB information can be seen as enabling through statute, and then it's now on the agency, right, along with their audit practitioner, to really figure out what works for me. And this is something that kind of Christopher touched on a little bit, and the sizes being so different and the underlying assets being so different as well. And so, no two might be the same, even though they're right next to each other. And so it's about, hey, is this good enough? I tell my kids to clean their room. I don't have a definition for what clean means, but we work on it together to say, hey, do we think this is clean enough here? Right? Do we think this is periodic based on your policy that you've prescribed to go along with this standard? So I think it might be another way where the devil's in the detail and you're empowered a little bit to do some of that on your own through that relationship.
Yes. Joel.
I'm going to build on what Chris just said, and this really comes from, and I'm going to ask maybe an unfair question of anybody on the panel that would maybe like to address it because I'm springing it on you, but it's an idea about this that I heard, I think, in the last public forum of maybe we just, and Chris said it right at the end, that you would create some kind of policy for that works for your entity. But what if we required that policy to be disclosed in the accounting policy note so that the government then says to a user, this is how we go about determining how often periodic is for us for different types of infrastructure. Number one, would users that are on the call, would you find that useful? And then number two, this was suggested by an auditor who might say, now I know to audit it. Now I kind of have something to hold the government accountable for in doing periodic for them and what works for them. So any reactions to that as a way to do this as opposed, it's a little bit of a kind of continuing on with what Chris said, but asking the question.
Christopher, I think you had your hand up first.
Yeah, Joel, I would support that. I think that would be fantastic because the readers, they'd be able to evaluate whether their definition is reasonable. And then as auditors, we'd be able to audit it. So I think that would be great.
Thank you, Christopher. And then Hendrik.
Yeah, to follow up on Lisa's question, I think I have two quick things to share. First, maybe one more trigger that I think about. Like this is from the reader's perspective. Like the fully depreciated but still in use flag itself is a trigger. Like if the asset has zero book value but is still in service, that's a signal that useful life was wrong and it should be revisited. And secondly, still from the reader's perspective, whatever triggers you pick, ultimately, and we expect that we require the policy to be stated in the note because right now only one of our 53 government that we visited shows readers that they review it at all. So ultimately, we think pick whatever trigger that makes sense and make it visible to the readers.
Thank you, Hendrik. All right. Lots of great feedback on that topic. Just putting out there any last items before we move on to note disclosures. All right. Seeing none, we are going to move on to the fifth topic, which is no disclosures by network. So paragraph 9 of the exposure draft proposes that information about infrastructure assets should be included within note disclosures about capital assets and divided by network. Statement 34 requires that note disclosures about capital assets be reported by major class of capital assets and identifies infrastructure assets as a type of major class. However, feedback from users indicated that dividing information about infrastructure assets by network is useful for making decisions and assessing accountability in circumstances in which a government has multiple networks of infrastructure assets. So that brings us to our fifth question. What feedback do you have about the proposal to divide information about infrastructure assets by network within note disclosures about capital assets? And for this one, Hendrik, if you wouldn't mind kicking us off.
Yeah, thank you, Joseph. For me, I think splitting the nodes by the network makes sense because imagine that one big lump number doesn't tell readers much information, right? It doesn't tell us about the roads, the water, the bridge, and also they are very different from each other. And network is where the numbers become useful, and it's also how government already manage these things. So for most, it's not a big heavy lifting. For most of the government, I don't think it's a big lift. So I'm for it, and I only have one note for that. Define a network the same way for everyone, so that you can compare with each other. Otherwise, from my researcher's perspective, it is very hard for us to compare among different entities. Um, yeah, and I think that's my general view on this.
Thank you, Hendrik. Gabrielle.
Yes, so this is particularly essential when you have a government that has multiple major networks of assets. So they have an electric system, a water system, and a sewer system, and those are being reported as enterprise funds in the statements. However, they issue debt under separate bond indentures. So this level of detail will be very important for us as end users because it gives us a better sense of their future capital needs as well as their future debt needs. And that's an essential factor for us as we're analyzing municipal credit for investment.
Gabrielle. Paloma.
Yeah, I'll say that Gabrielle actually kind of queued me up pretty nicely, which is that I'll give a little Colorado flavor to this, which is that we have our definition of enterprise funds. That's a more, GASB related thing. And then we also have uniqueness because of Tabor in Colorado. So because of Tabor, enterprise funds, they need to be 90% self-sustaining. And so there can't be this, we can't subsidize, should we want to keep our enterprise fund status, we can't subsidize our water fund, say, by taking from the general fund. And so because of that, when we need to build, for instance, we just went through this we needed to build some new water tanks because Broomfield has expanded and there's a specific area where if we were not to do that, the neighborhood surrounding that area would not have a safe amount of water pressure. So if there were a fire, our fire department would not be able to fix that situation. So we had to take out a bond for those water tanks, and that has to be, that is, as Gabrielle was saying, and then I'll just elevate this more and say that it's in state, like the implications of state statute are that they have to be contained within the enterprise fund. They have to be contained within our potable water fund, essentially. And so that's really just adding an exclamation to this, is that, yes, agree with Hendrik, these are independent systems that should be handled separately. Yes, and then even within that, like sewer is different from potable water. These are different funds that can have different bond ratings. And then the extra Colorado flavor is that because of Tabor, this is even more deeply embedded within our state statute. Thank you.
Paloma. Christopher.
Yeah, we support this change. We feel that it's going to provide value to the reader at seemingly very little cost. I would recommend, if possible, we could get an illustration in the appendix of maybe a roll forward schedule of what that footnote would look like at a network level, similar to what you did with GASB 104.
Christopher. And last up will be Anas.
Thank you. Yes, we also support this change, and when we work on the field instrument during the field study, that was something that was really didn't create extra cost for us to prepare. So we totally support.
Oh, thank you, Anas. Okay, that's everybody. So would anyone like to follow up on what they've just heard or add to their prior comments related to dividing note disclosures of infrastructure assets by network? And seeing no hands up, would also pose the question to the board. Do any of the board members wish to follow up on what they've heard related to no disclosures by network? All right. Seeing none, we are going to move on to the next topic, which is for infrastructure assets that have exceeded 80% of their estimated useful lives. So paragraph 11 of the exposure draft proposes to disclose the historical cost, accumulated depreciation, and the historical cost weighted average age of infrastructure assets reported using historical costs net of accumulated depreciation when they've exceeded 80% of their estimated useful lives. That information will be separated between those that are fully depreciated and those that are not. So essentially ones that are exceeded 80 but not fully 100% depreciated. And additionally, this information will be provided, again, by network of infrastructure asset. So that brings us to our sixth question. What feedback do you have about the proposal to disclose information about infrastructure assets reported using historical costs net of accumulated depreciation that have exceeded 80% of their estimated useful lives? And Gabrielle, if you wouldn't mind starting us for this one.
Yeah, sure. So in our view, when major components have various maintenance cycles, replacement timelines, or cost profiles, imprecise estimates can distort our understanding of the overall asset health and where costs and risks are concentrated within a system. And in our view, 80% seems to be a reasonable threshold to identify what assets are approaching end of life. And as analysts, it gives us a good estimate of what might be needed to be replaced and added to the capital plan. In our view, that's particularly helpful for management as well. And so that's my response to that one.
Gabrielle. Next will be Paloma.
Great, thank you. Yeah, I really support this. This is kind of going back to my opening statement of for those of us who really remember calculus, which I assume is actually most people in this group because it's a rather learned group here. But it's where we are, then there's the slope, and then there's that rate of change. And so again, for Broomfield being in the situation that we're in, we're transitioning from this growing community where there's a lot of new stuff to needing to repair and restore what we already have. And so gaining additional insight for us into whether we are actually maintaining that really well, whether we're seeing more over time of our assets get below that 80% threshold, that is really, really important for us to kind of see around the corner and make sure that we're setting up our community for success going forward. Because again, things are good now, but we've seen the life cycle of cities, and Broomfield's not special or immune to that. We're just younger. We're just in an earlier phase of it. And so I think this insight is really helpful. I will defer to the other experts as to whether 80% is the correct threshold or not. It sounds like there's a lot of good precedent for that, but I don't have a specific thought there. Otherwise, though, I think this is an incredibly valuable recommendation, and I support it. Thank you.
Paloma. Christopher.
Yeah, I can see why this disclosure is helpful. I think that initially it's going to maybe be the impetus for governments really analyzing very closely their useful lives. Right, we've got a lot of fully depreciated infrastructure assets on the books, which still maybe have, 10, 20 years worth of life. And so, I think that most governments probably wouldn't want a whole lot of infrastructure assets reported in this footnote disclosure. And so that will be the impetus, I think, for getting things corrected. But I do think, while not nearly as costly as the componentization, it is probably one of the more costly pieces to this standard. And I think that the users of this information is probably a smaller group. And so again, cost benefit analysis, I think, is important on this. I think that there's also, it could lead to potential erroneous conclusions as far as, it looks like, we've got a big number of capital assets, of infrastructure assets that we're going to have to replace soon. There's going to be huge obligations on the government to do that. That might not be the case because, of course, all of this is subject to estimate. And Also, I think that this is going to present, like I said before, I think that governments are probably fairly motivated to keep assets out of this note disclosure. And so I think it presents some audit risk too, that we don't currently have with infrastructure assets. And I'm sure that's probably not a big concern of the board, but it is a concern of ours. And so that's just something that we will have to obviously monitor and look at with this standard. So thank you.
Thank you, Christopher. Next, to be honest.
Thank you. We have a concern about this, and that's mainly related to the methodology that we use here at TxDOT. We keep the cost of the infrastructure that we would like to capitalize in CIP for 3 years, and in the fourth year, we move that layer of costs into infrastructure, and then we depreciate that over a term of 40 years. And this is based on average length of contracts of 3 years, which we learn through 10 years data. And since this approach is based on layer cost transfer than at the level of a specific road phase, TxDOT managements are concerned that the proposed disclosure may not accurately represent the actual condition of a specific road phase.
Thank you, honest.
Thank you.
Last to be Hendrik.
Yeah, thank you, Joseph. If I may, I want to bridge the room a bit. So again, I've heard people talk about that 80% is a random line and that average isn't the same as condition. And I agree. I think both are fair. But based on our findings, up to today, meaning like 2025, aging or condition information shows up almost only for the government using the modified approach. That's a 21 out of 53. And the other 32 just depreciate, and the readers gets no signal about how worn things are. So I think for them, this wouldn't be perfect, but it's a first agent signal at all. And like something like a rough signal beats the total silence, right? So I would suggest to keep it and add a plain note so nobody reads too much into that single number. And that's it. Thank you.
Thank you, Hendrik. Well, that is everyone on that topic. So first, for the participants, would anyone like to follow up on what they've heard or add to their prior comments based on the discussion of infrastructure assets that have exceeded 80% of their estimated useful lives? And seeing none, I would also turn it over to the board. Do any of the board members wish to follow up on what they've heard for this topic? Lisa.
Yes, hi. Quick question for Chris. Chris, you mentioned that it would be a costly provision. If you're doing componentization and you're doing the periodic reviews, forgive me, I just don't, I'm not someone that's in government and don't. What's the cost associated with preparing that number?
Yeah, I think that there's costs obviously in compiling the footnote disclosure and going through your assets and going through the historical cost weighted average age calculation and so forth. And governments will get better at it as time goes on, and they'll have systems and tools to aid them in doing that. I guess I wouldn't. It's not nearly as costly as the componentization. Nowhere in the same realm as that. I think the point I was trying to make was the benefit, I think, is not as great as some of these other provisions. And so I think that there probably will be some users that benefit from this information, and it'll be an input into their analysis. It'll be one input point. But I think that probably the vast majority of users will not really find this very useful to them. And so I would say that it's more my issue is on the benefit side rather than the cost side.
Okay, thank you.
You both. Alan. Alan, you're on mute.
Anise, I want to ask a question, and I'll come back in 1 second. What I will say is, what we hear a lot is in the user community, they believe that useful lives, depreciation expense, and what they would call age of plant are some of the most important metrics they have when it comes to capital assets and infrastructure assets in general. And what they would tell you right now is they don't have that information. So they would tell you this weighted average cost is one of the most important data points they're going to get out of this entire project, because it allows them to then determine how much of the what the age of these assets are, and inflation adjust the cost to determine what the capital outlay might need to be to replace them. Now, I do think that turns into, if you have a lot of them over 100% and you haven't periodically reviewed your useful lives, you're going to reset your useful lives, which maybe gets some of those things out of the 100% bucket, because that's going to very much be true. But I would say that this weighted average thing might be to certain users. We've heard this more than once. Certain users, it's the most important number of the entire project, because it lets them do what they can't do today. But Anise, you said two things, and I just want to double down. I just want to make sure I understood two things you said. Number one, I think you mentioned about the fact that you have a process right now where you'll let an asset sit in CIP, a project sit in CIP for 3 years before you move it over into being placed in service. And that's just really an estimation for having to know all that information at a detail level. You just have this conceptual estimated idea that a project sits in CIP for 3 years, and then you move it to production, essentially. I don't know there's anything in our project that would change that. Let's first say that. I don't know there's anything we've proposed or anything we're doing that would change that. But then you worried that this idea of these weighted average costs were going to cost you a lot of time and effort and money. You didn't say it exactly. I'm paraphrasing what you said. You didn't exactly say it like that. So bear with me. I would love to know a little bit about that in general. If there's a cost, you said there's a cost worry for you.
No, sir. So we are afraid. We are afraid that this disclosure does not provide the level of specific roadways to the users, the condition of the specific roadways.
Well, okay, that's fair.
Of the timing.
That's fair. And there is a distinction, obviously, between, and we've talked this a lot with the board. There is a distinction between condition and maintain it in a way to get to its end of its useful life. Those aren't the same thing, right? And modified approach really deals with condition. When if you're not doing the modified approach, it's really about, are you incurring the costs you need to get it to the end of useful life, and is your useful life correct? But fair point. I understand your point of what you're making out there. So I'll be quiet and let our chair talk.
Thank you.
Sure. Alan, you almost made it to the end. I was about to just lower my hand because you kind of covered most of what I was going to say, but you stopped short at the end of going something that we've acknowledged, I think, or at least some of us have acknowledged as the project has gone along, is that the modified approach is probably a closer or better way to account for infrastructure based on how governments tend to manage their infrastructure assets. They don't tend to replace these things once they get to some end of an estimated useful life. They just do whatever they need to do to preserve them and keep them going, right? But the board, a couple of times now, has said, maybe that's true, or at least some of us said maybe that's true, is just not cost effective, cost beneficial enough for us to require every government to do the modified approach. We left it as an option for governments that want to do that, understanding that's really how they maintain it. But if they don't want to invest in condition assessments as routinely as it requires, or whatever it might be, that some infrastructure, maybe roads are okay, but other infrastructure, it's harder to get something to compare it against to see, are you keeping it at the right condition? We didn't want to mandate that, and so we didn't. And so we're just trying to make the best of depreciation, understanding it's maybe not the most ideal way to do it. But I hope, I guess, Anise, a little bit of what I would say. I don't think I would have any, like Alan said, seems like the way you convert from CIP to in-service, I don't think there's anything in this project that would change that. And I guess to be clear on what I think Alan said the same thing, really it's about the 40-year part, right? It's the periodic review of the assessment of estimated useful life when combined with the 80% that really creates the maximum benefit here. And it's the 40-year thing that we want you to maybe, you're going to have to look at and figure out for your roads overall, is that the right number or should it be adjusted up or down? And then from there, we didn't mandate a unit of account. So we're not necessarily saying it has to be individual roads, understanding that, in an ideal environment, that's the better assessment. But we understand, especially a state like Texas, with all the roads that it has, you're going to be using averages. And it's okay to use averages and apply against, here's the 2020 roads we added, here's the 2021 roads that were placed in service, and apply whatever your new estimated useful life is against that, and kind of keep going with each layer. We think that's going to be a better accounting and an improvement, but not yet have you get down to, trying to figure out what your exact unit of account is. Is it this road? Is it this mile of road? Is it this segment of road? Like, what is the actual asset? We didn't mandate that. And so you can keep using what you're doing, but we hope the estimated useful lives will kind of result in better end information and then inform what amounts of those should end up in this 80% kind of area. And one last thing, and I've talked a lot, is that part of the periodic review of the estimated useful lives is you have to consider how you're maintaining your infrastructure assets and to continuously then adjust it. So if you keep maintaining the road and that keeps pushing out the estimated useful lives, maybe some of that maintenance will be capitalized, but others of that maintenance just might help it get to the end of its estimate or help it extend its estimated useful life. It's just going further and further out. Then that's okay. We won't get to the 80% if you're really maintaining it along the way and you kind of get there. So all of this stuff will play together, I think, to get a better number for admittedly assets that may never get to their end of their useful life because you're really just preserving it. So no questions in there, just follow-up comments from now.
Thank you very much.
Thank you, Joel. Hendrik.
Yeah, just want to quickly corroborate Adam from the data side. And sorry if I say it again, because I think I mentioned it before. And to put it briefly, like in our 53 government examined, 33 give readers no signal, no agent signal at all as of today. So I think for those readers, the valid average age isn't one more input. It's just the first number of its kind they have ever seen. So that's something I want to add on.
Thank you, Hendrik. All right. Before we move on from question 6, just one last check. Anyone else have anything else to add? Seeing none, we're making great progress. I appreciate everyone's feedback so far. I think now would be a great time to take a short break. We're a little over halfway through. We've got 3 questions left when we come back. So it's about 2:42 now. Let's plan to start up again at 2:55 Eastern. All right. Thank you. You're right. Well, everybody, thanks so much. We are back. We have 3 questions left for us today. Again, sincere appreciation for all your time and feedback for the first half of that session. It has been a really great conversation, a lot of excellent back and forth, very useful, I can say, for the project staff, and as I imagine is for the board as well. So thank you again. Let's kick right off into it, which would be the next topic is the policy for monitoring the maintenance and preservation of infrastructure assets. Paragraph 10 of the exposure draft proposes that governments with a policy for monitoring the maintenance and preservation of infrastructure assets should briefly describe that policy in notes to financial statements. The board believes that such a disclosure of a government's policy in this regard is essential information that would let users of financial statements know how a government determines whether maintenance and preservation expenses should be incurred for its infrastructure assets. It would also provide users with essential information for assessing the government's accountability for services it provides through its infrastructure assets. So that brings us to question 7, which is, what feedback do you have about the proposal to briefly describe policies for monitoring the maintenance and preservation of infrastructure assets? And Paloma, it looks like we're back to the top of the batting order. So if you wouldn't mind kicking us off for this one.
Yeah, ready to do that. Hopefully not strike out and at the very least walk onto first. So here we go. I think this proposal, it's a good first step. And I wonder whether as time goes on, and we see kind of how these reports shake out, whether there's any iteration we should be doing. And really the one part that I understand why this decision was made. I do have some mixed feelings about it, is that only governments with existing monitoring policies. And I get that it would probably be a little bit more onerous for those smaller governments. From Broomfield's perspective, I don't think we would have a problem with it, but it is the sort of thing where I think it potentially creates some ambiguity in terms of whether something is being disclosed, whether we truly don't have it, or whether it's not being disclosed. And I also do think that more of us should have that sort of policy. So again, I get that this is a way of not kind of doing things all at once, shoving people in that direction. I would just say that I think this is a great first step. I would keep an eye towards the future and see if there's anything we should consider amending as the years go on. Thank you.
Thank you, Paloma. Next up will be Christopher.
Yeah, thank you. So when I initially read the exposure draft, my question was, how does this information align with concept statement 7? And the board's opinion that's in this discussion prompt, I think, makes that connection to a kind of a finance type policy. And so I think I'm satisfied from that standpoint. It does still seem like an operational policy and not as much of an accounting and finance type policy, but I understand that the connection. I would like maybe a little bit more definition around what a policy is and the formality of that policy and the threshold to meet that policy requirement or the policy definition. Because if it's merely a management policy or a very informal operating policy, governance doesn't have to abide by that. They don't have to follow that. So if it's not, approved by executive management or governance, I don't think the policy has teeth, and it's not very meaningful and could be misleading to the reader as well. So if this requirement is kept, I would just suggest introducing a formality threshold to the policy.
Thank you, Christopher. Next up, Hannes.
Thank you. I think I find it useful for assessing the government's accountability, as board stated. And we have this policy here at TxDOT, and we easily can describe it in our notes.
Thank you, Hannes.
Yes, sir.
Hendrik.
Yeah, I'm for it. Just the same bucket as the review. I think it is cheap, it is useful, because you're just writing down a plan you already have. Also, one more thing, and also as Parliament figured it as well, because it only applies to the government that have a policy. So if readers still cannot tell no policy from policy not disclosed. So I will nudge it towards everyone stating their approach, even if just briefly mention that. So silence actually means nothing here. But yes, I support it in general.
You, Hendrik. And last up is Gabrielle.
Yeah, like others, I agree with this as well. I think it's an important signal for the overall governance strength, framework, and how strong that is. It allows us to see, and assess the adequacy of a government's maintenance efforts for its assets. On the other hand, there could be some concerns about the language being boilerplate and in turn not offering much value. So there are definitely benefits here, but then there also, is a risk. And that's all I have.
Thank you, Gabrielle. So that's through all the participants. So I would like to then follow up. Would any of the participants like to follow up on what they've just heard or add to their prior comments on this topic related to policies for monitoring and maintenance, monitoring the maintenance and preservation of infrastructure assets? And seeing none, I would also then turn it over to the board. Do any of the board members wish to follow up on what they heard related to these types of policies? All right. Oh, Joel.
Yeah, I might ask, I'm going to follow up, not necessarily, Chris, to you, because I think you kind of addressed your thoughts, but this notion of can the policy be informal or does it have to be a formal enacted policy? You kind of described a rationale for why it should be just the formal enacted one. At other forums, we've heard some people agree with that, and we've heard others say the opposite, that they would, that would encourage governments not to enact formal policies. And so we should just require kind of even informal practices to be included in this notion of a policy, not just formally enacted policies. And so I'm interested in any maybe of the users on the call, if would it be just as useful to have an informal practice disclosed here, or would you only want formally enacted policies? Understanding that the more informal they are, as Christopher pointed out, maybe the less, hard in which the government might actually, adhere to the practice. So any thoughts anybody has on that as we move forward would be helpful.
All right. Well, if anyone does, please absolutely reach out. We'll be happy to discuss that further, because it is a question, as Joel mentioned, has come up a few times, and it can create kind of an important distinction between how that might be used for accountability. All right. Well, moving right along, we are going to move on to the topic 8, which is maintenance and preservation expense. Right. The basis for conclusions of the exposure draft includes a board member's alternative view that the proposals should include information about the amounts governments intend to and actually spend on their infrastructure assets to allow them to provide service throughout their estimated useful lives. Though the preliminary views proposed to provide such information as no disclosures in RSI, the board was persuaded by feedback from respondents to preliminary views that the costs expected to be incurred by governments to separately track maintenance and preservation expense related to infrastructure assets justify the perceived benefit users of financial statements would receive in comparing those expenses to their expectations. As such, the board did not include those proposals from the preliminary views in the exposure draft. That brings us to question 8, which is, what feedback do you have about the board's decision to not require governments to disclose maintenance and preservation expense in notes of financial statements as proposed in the preliminary views? And Christopher, if you wouldn't mind taking the lead on this one.
Of course. We support it. We appreciate the board, looking at the cost benefit of this, and we agree that this would be fairly costly disclosure to put into place. And just more broadly, I'd like to thank the board for I think that the board does a very good job of being attentive to the costs of new standards on state and local governments. And it definitely shows. So we appreciate that you reviewed the feedback on the preliminary views and all through the due process process. We thank you very much for being attentive to that and the burdens of on state and local governments.
Thank you, Christopher. Next, Thomas.
Thank you. Yes, just as Christopher mentioned, we were so happy that the board considered our suggestion. We didn't have this information readily available to us when we were trying to comply with the preliminary view field instrument. So yes, we appreciate the board thoughtful consideration on this. Thank you.
Giannis. Hendrik.
Yeah, I think this is a hard one, but I'll keep the maintenance information. The question it answers is simple, right? Is the government keeping its roads in good shape or letting them slip? And right now, most readers cannot tell, and the numbers are not perfect. But even even a rough one will help the readers. So I will bring it back, but as some extra information, not as data on the books and not as an audited forecast, just labeled as management estimates. And I also want to link this to one of the academic research. And I remember there is a paper published in 2024 in the Contemporary Accounting Research by McDuff and Yan, and they find that the modified approach states spend over 20% more on the upkeep. That's not my number. I didn't verify those. That's not, and based on my understanding, that's not a causal relationship. But it says maintenance tracks what governments actually do, and also I think that is related to Paloma's point that about the water story, right? The water story is the live version, meaning deferred maintenance stayed invisible until it forced the 50% rate hike. And that's my point on this.
Hendrik. Gabrielle.
So with this one, we strongly disagree. We see this as disadvantageous to users of the statements. The disclosure of long-term maintenance expenses is very important to us. It helps us assess whether the government is adequately maintaining and replacing assets, which in turn support essential public services. Without this information, it is very difficult to evaluate the condition of a local government's infrastructure assets and a true picture of the financial health. As you all may know, insufficient capital spending, it can lead to water main breaks, sewer overflows, utility outages, and even regulatory violations. One comparison I can make is to the pension. So in the case where governments are not contributing at least the minimum level, their liability builds over time. Though that things have changed to require more disclosure, that's an important element. And we see a government that's not making the right contributions to maintain the plan in a healthy way. That's a concern for us. And I view this situation is the same. It's very important for accountability, especially to your citizens and those you serve. So this is something that we strongly disagree with. And that's what I have on that.
Thank you, Gabrielle. Last up would be Paloma.
Great, thank you. Yeah, this one was definitely very difficult. I will say that in my letter and in my statements here, I will also say that I understand the reasoning to kind of back off from this, but I also couched in my situation with the water rates and stuff, this is information that I would really value. And so what I would say is that I understand that this is onerous, and I've heard the feedback from our practitioners, not just the users like me of this information. But it was definitely a little bit of a bummer to see this walked back. I think I did like the dissenting opinion about maybe a more simple comparison of what we budgeted and what we actually spent, I would encourage the board to consider creative ways to surface this information in ways that are less onerous, because it's clear that this one was not going to fly. But I would, again, as a person making decisions that impact the financial future of our city and county, I would like to get at this information. And if we can think about ways to make this more workable, I would really, really encourage us to think about that longer term. Thank you.
Well, that we've been through all the participants. So first up, would anyone like to follow up on what they've heard or add to their prior comments on this topic regarding disclosures of maintenance and preservation expense? Seeing none, I would also turn it over to the board. Do any of the board members wish to follow up on what they've heard related to this topic? And Lisa, you're first.
Thank you. So, kind of following up on what Paloma was saying, and what Gabrielle was saying, this we've heard from users is really important information to have, because it allows you to not only know what the age or the age somewhat condition through all the other processes we were doing in the exposure draft, but it allows you to have a sense of how well is a government maintaining its infrastructure, and that can have a long-term impact on the future credit quality or the future financial stability of an entity. So in thinking about that, and knowing that thinking that it's maybe important to get something, and maybe what was originally proposed isn't that, are there other ways, other less costly ways, or available information that could get users, an idea of how governments are maintaining those assets? I know that the alternative view had the budgeted versus actual, but are there other things that governments have that would be of value here?
See none, I guess we'll move on to Chris.
Thanks. So my question is just I want to pick at the value that you guys understand or you see in this information. Is it in the comparison of the budget versus the actual? Is it more in the actual? Is it more in the expected? And I say this coming from a space where, in my previous role in state government, I was responsible for managing our historical sites throughout the state. And oftentimes when working with people, they'd have these budgets like, to expect to spend a certain amount on maintenance, but we were never going to get there, right? And so I compare it to my house versus my neighbor's house. I might do all the bells and whistles from a maintenance perspective on my house, and my neighbor might do half that amount. But just because my neighbor does half that amount, that doesn't mean that their house is halfway in the toilet, right? Or halfway in the grave, or that the foundation's falling apart. And that maintenance means different things to different people depending on how much you put into it or what you're expected to put in. So I just wanted to understand more. Are we valuing the estimate that this organization is coming up with as budget and the related actual to that? Is it more the actual and you're comparing that maybe to the overall spending capital overall, or in infrastructure overall? Just trying to better understand where the value lies, and if there are any assumptions in your value that we need to be considering as we think about disclosures going forward or anything else. Because if that budget is what you're looking for and there's value in that budget, then you might need to know a little bit more about it in order to understand how it was constructed, as opposed to assuming certain things.
Chris, Gabrielle, looks like you had your hand up for that.
Yeah, so I would say it's both. So we care about the budgeted amount and we care about what's actually spent. The budgeted amount allows us to see what the borrowing needs in the future could be, which is very important as we're assessing the overall credit profile of an entity. Not only is the current financial position important, but the future and the longevity of the entity. That's very important for us. And understanding what their borrowing needs could be in the future is very important. And when you look at actual versus budgeted, that tells us how good is this management team and in managing their assets and managing their finances. Because if you're budgeting a number and you're not spending that, there's something wrong there. So I think that provides its insight on your financial stewardship. So that's what I say to that one. I mean, it's very, very important to us. I mean, I really just can't emphasize this enough. I understand and very sympathetic to the cost of this, but I think there's very much so long-term benefits to having something that gets us what we need here.
Thank you, Gabriel. Paloma.
Great, thank you. So first I want to acknowledge Lisa's fabulous question, and it was so fabulous that I don't have a good answer for that, and I was going to say that, but it's something that I should really consider. And then Chris, to your question, I think Gabrielle had a wonderful response to that. I'll take it in the direction of like kind of this high level board member essentially making decisions for the city, which is that I want to know the spend and then the impact on the state of our infrastructure. So it's maybe even, I think you raise a good question, which is that, yeah, actual budgeted versus actual. I think that's important for the accounting department. For me, for my residents, for someone who's going to have to answer to my residents, I need to be able to make the decision of whether the dollars going in did yield the sufficient result for the residents. Like, this road is sufficiently maintained, we are good, we are happy with that. Our water infrastructure sufficiently maintained, we can continue to develop all of that stuff. So it is, yeah, it is a good question, and it kind of made me think. And really it is like whether the impact of the budgeted and then spent amount yields to a city that is livable, maintained, and keeps the services that we can keep for the foreseeable future.
Jackie.
So let's talk about the budget to actual again a little bit. I want to follow up a little bit on what Chris was saying too. How clean does that information have to be? Because as Chris pointed out, in budget, a lot of governments have told us that they actually budget by function. They're not going to be budgeting by infrastructure assets versus other kinds of assets. And there may be things in there that really don't have anything to do with the longevity of the asset, like painting center stripes down the highway or the road. That's not going to add to the value of the asset, but it's going to be in their budget. Mowing the ditches, those kinds of things aren't going to add to value. Putting up a stop sign. So how clean do you feel it needs to be for it to have value to you, I guess?
Hey, Gabrielle, you have a response to Jackie.
I just have a clarifying question. Did you say you wanted how clean it needs to be? Okay. I mean, I think it's obviously not going to be perfect. You know, I think more just what's general is okay. We don't expect perfection, and we know that's not possible, but just having something that is useful, that could mean a lot of different things, but we're not looking for precision here. Just a general, when I'm thinking about like a water system or a sewer system, you know, it could just be all the expenses or all the budgeted expenses for that system, and then you compare what you spent to that budget year to year. And so it's really not always just what happened at a one point in time or 1 year. We're looking at the trend over time. So if we see that there's a trend of either underspending or overspending, that tells us something. We're not looking at each line item, really. It's just a general idea is what's helpful for us.
Thank you. That's helpful.
Real. Joel.
So, Gabrielle, and anybody else, but I'm gonna pick on you a little bit, or not pick on, ask a question, and maybe I put you on the spot is a better phrase than pick on you. And it's something that I have, I think over the course of this project, wrestled with, and at times I think I kind of understand, and at times I don't. And I want to be clear, maybe at least with you, what you consider maintenance to be because of how you describe the budget and the impact that might have on required borrowings, additional capital they might need, et cetera. I'm paraphrasing, at least what I heard you kind of say. And that's this idea of distinguishing between capital expenditure maintenance and operating expenditure maintenance. And I'm going to tell you how I think about it and how I think we as a board were kind of thinking about it, at least in the preliminary views document. And that is capital expenditures. So these items that will replace or really be invested in a capital asset that extend its estimated useful life beyond what it originally was. Those are what I would consider to be CapEx maintenance costs. Those actually weren't the kinds of maintenance things we were getting at in the preliminary views. In the preliminary views, we were getting at operating expense maintenance, which is more what am I spending in order to, am I changing the oil in my car so that it gets to the end of its estimated useful lives instead of replacing the engine that might actually extend the estimated useful life? I know I'm using a vehicle and equipment example as opposed to an infrastructure example, but when you talk about maintenance and this disclosure and a budget to actual, are you including one, the other, or both?
I think that's a great point, and I appreciate you clarifying the board's perspective. I would say both are important. I think sometimes, when it comes to the operating expense, some governments classify them differently. But I would say it would depend on the magnitude of those operating maintenance expenses. For some governments, that could be quite large, depending on the size of the system. So I would say it is very important when it comes to those enterprise systems, even the operating maintenance expenses. Those are very, very important to us. But again, I appreciate you clarifying and making the distinction between capital and operating.
Thank you.
Before we move on to the final topic, any other comments on question 8 before we move on? All right. See, none, we'll move into the last topic, which is items related to, the modified approach. The exposure draft retains the option of using the modified approach to report infrastructure assets with some minor modifications. For example, paragraph 8 proposes to remove language used in statement 34 that the board was concerned some stakeholders may interpret the guidance to mean that an asset management must perform the requirements, not the governments themselves. Paragraph 13 of the exposure draft proposes that the RSI schedules already required by statement 34 to be presented for 10 reporting periods instead of only 5, which the board believes is essential for placing such information in an appropriate historical context for these long-lived capital assets. Paragraph 20 also acknowledges that the information for those 10 reporting periods to be presented as RSI may not always be initially available, and so provides that such information could be presented for as many years as are available as a part of implementation and rolling into that. And then lastly, paragraph 14 of the exposure draft proposes that related notes to those RSI schedules disclose any changes in the condition level in which government intends to preserve its infrastructure assets reported using the modified approach, and the reasons for that change should be disclosed in notes to the RSI schedules, as the board believes that such information could be considered a factor that significantly affects trends in the information reported. So paragraph 17C also proposes that transition guidance require this disclosure to be applied to the beginning of the reporting period in which the guidance is first implemented. So that brings us to discussion question number 9, which is what feedback do you have about the proposals related to reporting infrastructure assets using the modified approach? And Anas, if you wouldn't mind starting us off.
Sure, thank you. Yes, I did a little comparison between the new requirements and what we had in GASB 34. I'm thinking the changes these were slight changes. And one thing that I wanted to mention that we appreciate the board consideration that the data for the 10 reporting period may not initially be available. So that was something that we are really thankful for. And we currently don't use the modified approach, but we may consider it moving forward due the componentization changes. Thank you.
Thank you, Hans. Hendrik, you're up next.
Thanks, Joseph. From my point of view, again, this is based on my data. About 21 of the 53 governments use the modified approach, and the most of them are for highways. That said, I'm fine with the tougher rules, and my only worry is timing. Meaning, if you make the rules too hard and too fast, some of them will just quit or go back to the planned depreciation. And then readers will lose the condition information, which is the information we actually, as a user, we actually want to keep. So my general suggestion is to keep the rules, but give them more time to adjust.
Thank you, Hendrik. Gabrielle.
Yeah, I have no comment on this one. Thank you.
All right. Thank you, Gabrielle. Up to the top, Paloma.
Great. I'll also jump in and say that I have no meaningful direct experience with this, but that said, I do think the proposed changes do make a lot of sense in terms of clarification about the system requirements, making that accessible, and then extending that information schedule. I think that's great. More information is always better for us. And then changes in condition levels. Yeah, we don't want anyone quietly changing that without having that be a very clear and evident thing. So just agreement here. Thank you.
Thank you, Paloma. And then last up is Christopher.
Yeah, we support the changes to the modified approach. Paragraph 8, I think, is good clarification, potentially eliminating any perceived barriers to adopting the modified approach. I mean, the 10-year trend information makes absolute sense. Everything else is 10 years in RSI, and obviously you can't, I don't know, 5 years is much of a trend, so 10 years, that makes sense. And of course, the notes to the RSI are also important, informative, and interpreting trends. So we support all the changes to the modified approach.
Thank you, Christopher. So we've heard from everyone on this topic. So first off, would anyone like to follow up on what they've heard or add to their prior comment? And seeing none, does any of the board members wish to follow up on what they've heard regarding the modified approach? Robert.
Yeah, it was more of a comment, not necessarily a question. I mean, the two things from Anis and Hendrik, I wouldn't have thought, but necessarily, but I thought it was interesting. Anis talked about, and maybe others might, as they go through and can consider implementation, is they might consider the modified approach if they feel the colonization is too difficult. So that's something that we may want to keep in mind. And then I understand your concerns, Hendrik, that you raised about if some of this makes it more onerous or considered more onerous from those who use the modified approach, they go to historical costs. That's an interesting consideration.
Hey, Robert. All right. We're wrapping up. Any last comments on the modified approach? Okay. Again, everyone, really appreciate your time today. I would say, one last question for the group, which is what other comments would you like to share with the board about the proposals in the exposure draft? And we will, I'll just use the hand raise function in Zoom and I can call on you. Loma.
Great. So, I mean, this is an incredible amount of work. So I really want to thank you all for going through this in general. And I hope I made this very clear in my letter. I'm very supportive of these changes and the direction we've chosen to go. I think that we, in observing various cities, not in a super robust way, obviously, but kind of seeing how our infrastructure begins to slide. I've been really ruminating on that and bringing it back to Broomfield, thinking about how can we make sure that we kind of gracefully age into that maturing community while keeping our service levels as high as they can and making sure we're spending our money wisely on the assets that need to be spent. So knowing if we're going to run off that fiscal cliff before that ends up happening, because things are good now, and then thus now is the time to get our financial ship in order, which it is, by the way, but even more making it really strong for the future. So I think this is exciting. I would just say that, again, from this very high level, the direction I want to see is I'm going to say this 15 million times, calculus, the rate of change, right? Are we starting to go into that path? Because the time then to kind of change things would be now, to change that rate of change, figure out, do we need to examine some road diets? Like, do we have too much infrastructure? And we actually need to think about paring it down so that we can get good maintenance. Because ultimately, I will have to answer to my residents who elect me, and being able to kind of stop that that situation before it happens is something that I'm really, really committed to. And again, these changes really bring us more and more in that direction. So thank you all for the opportunity to comment, and really excited to see these changes and more iteration as time goes on.
Paloma. Hannes.
Thank you. Well, I wanted to thank the board as well, each member. And I had a follow-up question with Mr. Black, if possible. I wanted to confirm my understanding that TxDOT is okay with continuing using the layer approach that I mentioned or discussed earlier. Just wanted to confirm my understanding.
Denise, I don't think anything in this project would change that. So if that is something that you and your auditors have been comfortable with up to now, as to when something is placed in service based on your knowledge, your experience, your history, the data, then nothing here would change that. So I will, whether it's right or wrong, I won't comment on, but nothing here will change that. And if you guys have been comfortable with it, should be good moving forward.
Thank you, sir.
Hannes. Hendrik.
Yeah, and I also want to thank you for giving me this opportunity to share my thoughts. And maybe I would just draw a final conclusion based on my data findings. So in general, I think the cheapest disclosures, the periodic review, and the maintenance policy, I think those two are the ones, the based on our data, almost nobody shows today. So I would suggest to protect those, even if it's costly and even if it need more time. And I will be glad to send our findings when it reach a publication stage. I will share it to you guys. And also thank you for having me here.
Looking forward to it. Thank you so much, Hendrik. Gabrielle.
Yeah, I just wanted to say thank you all as well. As an investor, I know we have a very different perspective and point of view, and I appreciate you all taking the time to listen to what we have to say. I think this is a great project, and the outcome will be very constructive for all stakeholders. So just thank you again. And yeah.
Gabrielle. Well, again, for me, thank you, everybody. And I'll turn it back over to Joel. It's been a great conversation today. Thank you so much.
Yeah, thank you. And Hendrik, we always appreciate any academics that are doing research in governmental accounting and financial reporting. And so we do look forward to you sharing that. And any of you, for the questions that we posed, or if you have additional thoughts after this conversation, or maybe answers to things that we asked that you didn't have an answer for now, love for you to share that with us. The board will take all input all the time as we continue to work through this important project. But really want to thank you. This has been a great conversation. It's been great. It was great reading your letters. They were really thoughtful and interesting, but this discussion has only just expanded upon that. And hearing you kind of go back and forth a bit and then having the ability to ask you questions and probe a little bit has been just really, really helpful. I know it's a lot of your time and you're busy people, and we really, really appreciate you spending that time with us. It's been really helpful for the project. All right. With that, thanks
Thank you.
everybody. Public forum adjourned. See you all at some point down the road.
Thank you.
Thank you. Bye-bye.
Yeah.
Thank you.